Hi traders, today's video is best indicators to use in choppy range-bound markets. And today I'm going to cover the following topics, and they are oscillators, consolidation, stochastic oscillator, overbought and oversold, and trading at support or resistance. Now if you're looking for a new strategy to trade in a range-bound market, this one could be for you, so stay with me to the end as I show you how to trade using the stochastic oscillator. Introducing myself, my name is Duncan Cooper. I'm a full-time trader and the senior market strategist and trading mentor at ACY Securities. Okay, let's get into the first topic. Now today I'm going to be discussing the use of oscillators, and oscillators are a very popular indicator best used at support or resistance in a range-bound market. And examples of oscillators are the stochastic oscillator, commodity channel index, and the relative strength index. I've mentioned this before, but it's worth understanding that all indicators always lag price action. They only tell you what has happened based on historical price action, not what will happen, so always bear that in mind. Now, oscillators can be used to identify the turning points at support or resistance in a consolidation market. And consolidation is when price is making equal highs and lows and is bound between a level of support and resistance. When price is being held at support or resistance, your potential to make profit is just within the consolidation range, unless the range breaks to the upside or downside. So today I'm going to look at using the stochastic oscillator, and it was developed in the late 1950s by George Lane. And the stochastic oscillator presents the location of the closing price of a trading instrument in relation to its high and low range over a period of time, and it's plotted as two lines below the price chart. So here we have a daily chart example, and the stochastic oscillator is positioned at the bottom of the chart consisting of two lines, and the settings that I like to use are 9, 3 and 3. Now the stochastic oscillator identifies when price is potentially overbought or oversold. Overbought is when the indicator has a reading of 80 or above, and oversold when the indicator has a reading of 20 or below. So let's have a look at an example. Okay, so overbought and oversold, the two lines, there's an 80 line just here, which represents when the indicator is overbought, and down here at the bottom there's a 20 line that represents when the indicator is oversold. So just to show you a couple of examples, overbought, indicators at 80 or above here, price action puts in a high and moves down, indicator here is overbought, price action puts in a further high and moves down, and the indicator here is at 20 or below, and price action puts in a low and then moves back up. So hopefully you can see there that the indicator is showing you when price action is overbought and oversold, and can identify when price action may turn and put in a high or a low. Okay traders, now I'm going to show you a simple trading strategy, trading at support or resistance within an area of consolidation. So let's go and set the charts up in the MT4 platform, and if you don't have a platform you can download one from the link in the description below. Hi traders, just in my MT4 platform, so I'll show you how to put on the stochastic oscillator. This is a daily chart in front of me of the euro US dollar. Come up to the navigator, left click, and then click on the plus next to oscillators, left click, and there's the stochastic oscillator. So if you double left click, and then it'll probably come up with this window first. I've just been using it before. I like to set the K period to 9 rather than 5. I'll leave everything else the same. Colors, I like to change the colors a bit. I like to use green for the main. I like to thicken the lines up a fraction, like so, and then click OK. And then you'll see it on the bottom of the chart there. Just come up to the top, and I'm going to just click on that little X to get rid of the navigator, or you can come up to the bottom there and left click on it. Alright, so I've got my daily chart of the euro US dollar with stochastic oscillator on the bottom. I've drawn in some support and resistance just to show some consolidation areas, and just to show you a little bit of a strategy you can trade on the day chart. And we had some resistance here where the market started to get a little bit consolidatory and revisits resistance just there. And you can see, if I put my crosshairs in, that the oscillator moves up to the 80 level or just beyond, showing that price is overbought. And then, as we can see, price then moves back down. So I'm looking for the oscillator to be overbought at resistance, and a simple trading strategy could just be then to wait for a break of a candle low. So if I get my drawing tool, waiting for a break of a candle low, get a break of a candle low just through here. So on this particular day there, it breaks that one. I'd have my stop above the high. Then I'd be trading down to this level of support to see whether it can break or not. Obviously it does break a little bit, but you can see there, if you traded down from resistance, you could have taken profit down here at this area of support. And that turning point here was referenced when the oscillator moved into the overbought area. Okay, alright, so price comes down and we actually come back up and revisit the same resistance area, put in a little bit of a rejection candle. Oscillator here is overbought, it's above the 80 level, and then trading a break of that candle, a bit of a spinning top there, and stop above the high. We can see it, price moves down to the next level of support. Does it hold? No, it doesn't. It breaks through out of the consolidation area. Alright, and as we can see, price moves further down. Just want to show this top as well. So we've got an area of resistance drawn in from this top, and obviously price moves down. It false breaks this area of potential support. I'll just draw that area in. Then comes back up and revisits the top of the range here at resistance. We can see the indicator is overbought. It actually has two attempts at this resistance level, so if you did trade the break of that candlestick just here, stops just above the high, you would have got taken out there, which is unfortunate. But then it puts in another rejection candle, so if you trade the break of that one, because the indicator is still in the overbought area, trade the break of that one, obviously price actually moves down and your stop would go above here. So I'm not trying to show you a setup that works 100% of the time. Of course, it worked up here, it worked here, selling down from resistance. It didn't work here, but then the second attempt where it fails at resistance, if you take that trade, it does work. So nothing works 100% of the time. You just have to take the trade setup as you see it. So looking for price to fail at resistance in what looks like consolidation, looking for the indicator to be in the overbought above 80 level, and then trading a rejection candle, trading the break of that low, putting your stop above the high. Okay, so that's how I would trade down from resistance. Now let's get my drawing tool off. I've got an example here for the Aussie dollar on the day chart. So I'm just showing you this setup on a day chart, but it will work on a 4-hour chart and a 1-hour chart if you do the work and create your strategy. So here on the Aussie dollar daily chart, I've got a broad consolidation range drawn in. Let me get my drawing tool once more. So we have this low drawn in of support, this high level of resistance drawn in, and price action is moving down. Comes down to a level of support, tries to trade through, but then the next day we obviously trade and reverse back up. So when we're testing supports, and I would close slightly below, but this is a very major area of support. Indicator is below 20, it's in the oversold position. And then if you're waiting for price to reverse, break the candlestick high, the candle that tested support, stop below the low, you can see since then, if you took that trade, price has been moving back up within the consolidatory range, and it hasn't quite got up to resistance yet. So another trade may come together here. Price might further come up to this level, reject. indicators just starting to touch the overbought level, so price could come up to there today or tomorrow, reject, then you might see an entry to trade down, trading the break of that candlestick low to trade back down the range. Okay, so that's how I like to trade, using the stochastic oscillator on the day chart, trading from support back up the range to resistance, and then trading down from resistance back down the range once more. Okay traders, thanks for watching, and I look forward to seeing you in the next video. Now if you're interested in improving your trading, why not join me in my free beginner webinar series? You can register by using the link in the description below. All those that attend the webinars get full access to my own MT4 chart layouts and indicators. Okay traders, thanks for watching, and I look forward to seeing you in the next video.